Hello students, I'm welcoming you to all for this academic year 2021-22. In this video lecture, we are going to learn and understood the basic concept of an income tax. So let us start. So what is tax? Tax is the compulsory financial charge levied by the government on incomes, commodities like goods and services, activities or transactions. Here, a tax is a compulsory financial charge or some other type of levy imposed on a taxpayer, that is individual or any legal entity. So by a government organization in order to fund government spending and various public expenditure. And this is in tax is derived from the Latin word that is taxo. And here this is a basic source of revenue for government. Next one is the income tax. And income tax is a tax imposed on individuals or the entities, that is taxpayers, in the respect of the income or the profits earned by them. So commonly called taxable income. Income tax generally is computed as the product of a tax rate times the taxable income. So the taxation rates may vary by the type of or the characteristics of the taxpayer and the types of incomes. Type of taxes. So there are the two type of taxes, namely direct tax and indirect tax. So the implementation of both the taxes differs. You pay the sum of them directly like income tax, and while you pay the sum of the taxes indirectly like GST. So the direct tax, it is levied directly on the income of the person. It is progressive in nature. Example, income tax. So as a tax, such an income tax which is levied on the income or the profit of the person who pays it rather than the goods or service. It is directly levied on the income of the person. And here it is in progressive in nature. Example of the direct tax like income tax. Indirect taxes. Indirect taxes are commonly used and imposed by the government in order to generate revenue. They are essentially fees. That is levied. So the indirect tax that is levied on goods and services rather than on income or profits. So levied on the consumption of various goods and service. It varies with consumption or the production of the goods and services. Here it is regressive in nature. Example, GST. So in our fifth semester examinations, we are just concentrate on the direct tax. Income Tax Act 1961. It comes into force from 1st April 1962 in whole of India, including the Jammu and Kashmir. So it contains there is a various section, chapters and schedules. 298 sections, 23 chapters and the 14 schedules. It means here the Income Tax Act into the existence of 1961, but it came into the force and the rules will be applied in the 1st April 1962 in whole of India, including the Jammu and Kashmir, and it contains the 298 sections, 23 chapters and 14 schedules. Annual Finance Act can amend this act, that is Finance Minister. So here are the briefly introduction of Income Tax Act 1961. It means income tax equals to income plus tax. Those income which we have earned in the relevant year is to be paid tax as the government. Every person shall pay the tax on his income to the government of India. Every person shall pay the tax of his income to the government of India. Why pay the government of India? Because the law made by the Parliament of India as the Income Tax Act 1961. All the laws are made by Parliament to pay the tax to the central government. Articles 246 subsection 1 on the combination of India empowers of central government and state government to levy the tax on the various matters listed in Schedule 7 of the Constitution of India. Here the Parliament has some combinations of the Indian empowers central government, state government to levy the taxes listed in the Schedule 7 of the Constitution of India. So the three lists are there. first list is the union list, second is the state list, and third one is the concurrent list. All the three lists are the considering as the Schedule 7 of the Constitution of the India. And document containing the laws relating to the income tax. The documents are first Income Tax Act 1961 and the rules of the Income Tax Act 1962, Annual Finance Act. Fourth, circular and clarification issued by the CBDT. CBDT means the Central Board Direct and Tax. Any circular clarification issued by the CBDT under the central government. Next is the judicial decisions oblique case laws. Any new decisions are laid, it means the new entries or the deletion of the some entries. All these are the case laws as to be the containing laws relating to the income tax. So it is an introduction of the income tax. Tax, whatever the income which we have earned to pay the tax to the government of India, because the law made by the Parliament of India is the Income Tax Act 1961 and the Constitution of India has the empower to central government, state government to levy the tax on the various matters. There the three lists considered are there. First is the union list, state list, concurrent list, and all these are the documents containing relating to the income tax. Income Tax Act 1961, Income Tax Act Rules 1962, Annual Finance Act, Circular and Clarification issued by the CBDT, and the judicial decision and case laws. Income Tax Act 1961, but it came or it enforced the rules as the Act is 1962. These rules deals with the procedural part of the various aspect of the income tax, and the rules are prepared by the CBDT. CBDT it means Central Board of Direct Tax has power granted to its under Section 295 of the Income Tax Act 1961. Section 295 defines as the Income Tax Act 1961 as the power granted to the CBDT has prepared the rules. And these are the some functions include. The first is the computing the taxable income of an assessee. Taxable income of an assessee, it means the income is taxable, the amount of income used to calculate how much tax an individual or a company owes to the government in a given year. And second one is the computing the income tax thereon. After calculating the taxable income, apply the tax rate relevant for the financing year for which the company has been calculated to compute the tax liability. And the third one is the collecting the income tax of an assessee during the or the relevant year. So these are the rules of the income tax rules which is covered under the section 295 of the Income Tax Act 1961, and the power granted the rules prepared by the CBDT, Central Board of Direct Tax. These three functions are included. First function is the computing the taxable income, computing the income tax thereon, and finally collection of the income tax. Okay, the next one is the who are the liable to pay the income tax as per the section 2 subsection 31. A person who are liable to pay the income tax. A person, it means individuals, Hindu undivided family, HUF, companies, partnership firm or LLP, Partnership Firm Act 1932, and LLP it means Limited Liability Partnership Act 2008, Association of Person, Body of Individuals. Here all these are the persons are liable to pay the income tax. Okay. This is the main important concept. Financial year. Financial year is also called as the accounting year. It means the year has started the 1st April and ends on the 31st March. Okay, it is called the accounting year also. Start from the 1st April and ends on the 31st March. These are the important concepts of an income tax. Types of years. Types of year, there are the two types of the year. First one is the previous year and another one is the assessment year. Here very important concepts, previous year and the assessment year. Previous year. Previous year means as per the income tax laws, the income earned in the current year is taxable in the next year. So the year in which income is earned is known as the previous year. in the current financial year is known as the previous year. Here means the financial year immediately preceding the assessment year. So the financial year starts from the 1st April and ends on the 31st March of the next year. Assessment year. Assessment year is the year in which one file the income tax return of the year. Prior to it, that is the financial year. So it is the year in which the income that one has earned in the financial year that it's just ended is evaluated. Example for the financial year, that is 2020-21, and the assessment year will be 2021-22. In this chart, we easily understood the previous year and assessment year. In the previous year, the income is earned and income filed or the income tax, that is assessment year. Here the previous year example is, that is 2020-21. Here the income is earned and the assessment year where the income taxed. So the assessment year 2021-22. The next is the income of a assessee is classified under the 5 heads. It means income is defined under the 5 heads of a income tax under Chapter 4 of the Income Tax Act 1961. Section 14, income tax of person is calculated under the various defined heads of a income. The total income is charged under the rules of the Income Tax Act. These are the following heads of a total income under which the income of a person is calculated. So the incomes, the heads are there. First one is the income from salary. Second one is the income from house property. Third one is the profit and gains from business and profession. Fourth one is the capital gain. And fifth one is the other sources. Now just you have to remember all these are the heads of income, and which we learn in the next upcoming the lectures. So these are the 5 heads of the incomes. इन सबका जब भी हम incomes add करते हैं तो उसको क्या बोला जाता है? Gross total incomes. Okay, these are the 5 heads: salaries, house property, PGPP, capital gain and other sources. Okay. Gross total income. What is the gross total income? It means gross total income is the total income you earn by adding all the heads of the income. Income from salaries, properties, other sources, business or profession, and capital gains earned in a financial year, and all are added to arrive at the GTI, gross total incomes, minus deductions. Deductions means it is a reduction of a tax from your gross taxable income. Deductions, it is a form of a tax incentives along with the exemptions and credits. Gross total income less deduction, so comes the total incomes, or called net income. Net income means gross total income less deductible income related expenses, so comes the net taxable income. Here it is in some example understood the gross total income. So gross total income means adding all the incomes. Okay, just clear the example. Mr. Suresh, income under the following heads for the year 2018 and 19. It says under salaries rupees 89,000, capital gain 66,000, house property 40,000, other sources 34,000. Compute his gross total income. In this problem, 4 heads are given: salaries, capital gain, house property and other sources, but no deduction amount is given. So the gross total income, it means adding all the incomes. Salaries 89,000 plus 66,000 as capital gain, 40,000 as house property and 34,000 is other sources. Here it is in the solution. Mr. Suresh had earned the income, some heads of a income, and we have to compute the gross total income. He has earned the income from salaries. Income from salaries, he had earned the income rupees 89,000. Next, income from capital gains. Capital gains, he had earned the income rupees 66,000. Next, he had earned the income as house property. House property, he had earned the income rupees 40,000. The next head is the income from other sources. Income from other sources, he had earned the income rupees 34,000. So the gross total income, it means we have add all the four incomes. So comes the amount as rupees 2,29,000. So Mr. Suresh is eligible to pay the tax as the gross total income equals to rupees 2,29,000.